December 17, 2013. Martin Scorsese premieres The Wolf of Wall Street, a $100 million film about a man who defrauded investors, and buried in its credits under special thanks is the name of the man who helped pay for it with money looted from an entire country. His name is J.H.O. Low, and this is the autopsy of the machine he built. The United States Department of Justice traced more than $4.5 billion misappropriated from 1MDB, Malaysia's State Development Fund, between 2009 and 2015, the largest kleptocracy case in the department's history. And here is the detail that matters most. Nobody ever robbed a vault. Every dollar was taken at the moment it was borrowed, inside the plumbing of the bond deals themselves. The terminal bagholder is the Malaysian taxpayer. The government absorbed the fund's obligations by its own finance ministry's accounting, more than 43 billion ringgit already repaid, with nearly 10 billion ringgit still outstanding, and the last of the bonds run until 2039. An entire generation will service debt that was raised in its name and spent on yachts, paintings, and an election. Start with what 1MDB actually was, because the label is the first lie. It was billed as a sovereign wealth fund, but Malaysia had no sovereign surplus to invest. The fund was born in 2009 out of a small state investment authority, with no meaningful asset base and a mandate to borrow against the government's name, and within about 6 years, it had piled up roughly $12 billion of debt. Prime Minister Najib Razak chaired its advisory board while also holding the finance ministry. Issuer, guardian, and beneficiary were the same man. The operator sat entirely outside the organization chart. J.H.O. Low, Penang-born, Wharton-educated, 27 years old at the fund's creation, held no formal position at 1MDB. Yet the Justice Department says he was involved in setting it up and exercised significant control over its dealings. The architect was invisible to every bond document, and that was the design. The proof of concept ran in September 2009, months after the fund was created. 1MDB committed $1 billion to a joint venture with PetroSaudi International, a private oil company with royal-adjacent Saudi branding. Only $300 million reached the venture. $700 million was wired instead to Good Star Limited, a Seychelles shell whose sole beneficial owner was J.H.O. Low. The cover was a fabricated loan repayment, a wire memo claiming the days-old venture owed Good Star $700 million when it owed nobody anything, and the payment cleared through a J.P. Morgan correspondent account on September 30, 2009. It cleared because correspondent banking processes form, not substance. A bank sees a plausible instruction, not the underlying economics. That exploit repeats in every phase of this story, and Good Star ultimately collected roughly $1 billion through it. Then came the industrial-scale version. Across 2012 and 2013, Goldman Sachs raised $6.5 billion for 1MDB in 3 private bond deals, internally codenamed Project Magnolia, Project Maximus, and Project Catalyze. $1.75 billion in May 2012, another $1.75 billion that October, and $3 billion in March 2013. Goldman's take was approximately $606 million in fees and revenue, roughly 9% of everything raised. Underwriting sovereign-linked debt normally pays well under 1% of principal. When a bank is paid on the order of 20 to 90 times the market rate, that is not a price. That is a confession. The structure explains the premium. These were bought deals. Goldman's principal desk purchased each entire issuance onto its own balance sheet at a discount and resold it, trading its capital for speed and confidentiality. But speed and confidentiality are precisely what a looter pays for. A syndicated offering means roadshows, rating agencies, and investors reading the use of proceeds clause, while a bought deal means the money lands in days and nobody outside the room asks questions. The 2012 bonds priced off a guarantee from IPIC, an Abu Dhabi sovereign fund. Investors were buying Abu Dhabi credit, not one MDB's non-existent operating record. And here is the hinge of the entire fraud. Payments that one MDB booked as flowing to IPIC's subsidiary, Aabar, were instead wired to Aabar Investments PJS Limited BVI, a shell company one suffix away from the real name, with no genuine connection to Abu Dhabi. Roughly $1.4 billion flowed to that impostor's Swiss account, beginning almost immediately after each bond closing. A lookalike name defeats every control that matches payee strings instead of verified legal entities, and senior executives of the real Aabar were in on the scheme, which is why the impostor went unchallenged for years. The third deal ran the same play at higher speed. Within days of the $3 billion bond closing in March 2013, more than $1.26 billion moved out through shell companies, including one called Tanor Finance Corporation. Then the money went political. On March 21, 2013, Tanor wired $620 million into Prime Minister Najib Razak's personal account at AM Bank in Kuala Lumpur. 4 days later, another $61 million followed, $681 million in total, landing weeks before Malaysia's general election. That August, after the votes were counted, $620 million was quietly routed back into the shell labyrinth. The official explanation was a personal donation from the Saudi royal family. In January 2016, Malaysia's new Attorney General, installed after his predecessor was removed in the middle of the investigation, accepted that story and closed the case domestically. The American money trail ran not to Riyadh, but to one MDB's own bond proceeds, round-tripped through Tanor, and a Malaysian court would eventually call the donation defense incapable of belief. Meanwhile, the fund itself was running on Ponzi plumbing. One MDB had nowhere near the cash flow for its coupon stack, so it serviced old debt by raising new debt. And the asset supposedly plugging the hole was $2.3 billion of Cayman fund units held through a vehicle called Brazen Sky, paper whose stated value was, in substance, the fiction covering money already gone. The fund then pledged those units as collateral for a roughly $975 million Deutsche Bank loan. Fake collateral, real leverage. The unwind was textbook credit mechanics. One MDB claimed it had paid roughly $3.5 billion to IPIC under the guarantee arrangements. IPIC declared it never received the money because it had gone to the impostor. Neither side would fund a $50.3 million coupon due in April 2016. The grace period expired, and cross-default clauses tripped across billions of ringgit of the fund's other bonds within days. One missed payment metastasizing through the entire capital structure. Where the money went reads like an asset forfeiture catalog. A $250 million superyacht called Equanimity, later seized and sold for $126 million, Monace and Basquiat's, a private jet, a Picasso gifted to Leonardo DiCaprio and jewelry reported at around $8 million for Miranda Kerr, all voluntarily returned, and champagne-soaked parties that became Wall Street legend. The celebrities were props, not conspirators. DiCaprio was never accused of any crime and cooperated with investigators. And then there is the film. The Justice Department traced $238 million of one MDB money into accounts of Red Granite Pictures, co-founded by Reza Aziz, Najib's stepson, which substantially funded The Wolf of Wall Street's roughly $100 million budget. A movie about securities fraud, financed with the proceeds of securities fraud. Red Granite later settled with the United States government for $60 million without admitting wrongdoing. Journalism picked the date of death. Sarawak Report published the Petro-Saudi documents in early 2015, and on July 2nd of that year, the Wall Street Journal traced roughly $700 million into Najib's personal accounts. A year later, the Justice Department filed forfeiture claims against more than $1 billion in assets, naming the recipient only as Malaysian Official 1. In May 2018, voters removed Najib's coalition, the first change of government since Malaysian independence in 1957, and police raids seized cash, jewelry, and luxury handbags valued at roughly $250 million. The bill came due in order of proximity. The Justice Department found the scheme had paid more than $1.6 billion in bribes to officials in Malaysia and Abu Dhabi, the largest bribery total in the history of the Foreign Corrupt Practices Act. Goldman paid over $2.9 billion to global regulators in October 2020, with its Malaysian subsidiary pleading guilty, while the parent took a deferred prosecution agreement, plus a separate $3.9 billion settlement with Malaysia, roughly 10 times the fees it had earned. The people followed the institutions. Goldman Southeast Asia Chairman Tim Lessner pleaded guilty, cooperated for years, and received 2 years in prison in 2025. His colleague Roger Ng went to trial and got 10. In Switzerland, 2 Petro-Saudi executives were convicted in 2024 and sentenced to 7 and 6 years for their end of the original diversion. Najib fell in stages. Convicted in 2020 in a satellite case and imprisoned in 2022, he saw his 12-year sentence halved by a pardons board in early 2024. And then, on December 26, 2025, a Kuala Lumpur court convicted him on all 25 counts in the main 1MDB trial, 15 additional years and a fine of roughly $2.8 billion. He is appealing. The architect has never faced a courtroom. Jho Low remains a fugitive charged in the United States and Malaysia, never tried, never convicted, and the best available reporting claims he lives in Shanghai under a false passport, a claim Malaysia says it cannot verify. The banks that moved his wires fared worse. Singapore shut down BSI Bank, its first merchant bank license revocation in 32 years, and Falcon Private Bank followed months later. The autopsy finding is structural. 1MDB was never robbed. It was a debt issuance machine wearing a sovereign wealth fund costume, and the theft happened at issuance, inside the underwriting spread, behind a rented guarantee, through banks that clear form instead of substance. The single most legible warning was printed on the term sheet from day one. A 9% fee on sovereign-wrapped paper is not compensation for risk. It is the price of not asking questions.